markets have a casino characteristic that has a lot of appeal to people, particularly when they see, like I say, people getting rich around them. And those who haven't been through cycles before are probably a little more prone to speculate than people who have experienced the outcome of wild speculation. In any system, Keynes wrote about this in 1936, I think it was, in the General Theory, or 35, I think it's chapter 12. It's great chapter on investing. And he talked about investment and speculation and the propensity of people to speculate and the dangers of it, and worded eloquently. There's always the possibility of, there's always some speculation, obviously, and there's always some value investors and all of that sort of thing in the market. But when speculation gets rampant, and when you're getting what I guess Charlie would call social proof that it's worked recently, people can get very excited about speculating in markets, and we will have it from time to time in this market. There's nothing more agonizing than to see your neighbor, who you think has an IQ about 30 points below you, getting richer than you are by buying stocks, and whether it's internet stocks or whatever, and people succumb to it, and they'll succumb in this economy just as elsewhere. There's also a point which gets to your question. I would say that early on in the development of markets, there's probably there's some tendency for them, I think, to be more speculative than markets have been around for a couple of hundred years. Markets have a casino characteristic that has a lot of appeal to people, particularly when they see, like I say, people getting rich around them. And those who haven't been through cycles before are probably a little more prone to speculate than people who have experienced the outcome of wild speculation. So basically in this country, Ben Graham was, in the book I read in 1949, was preaching investment, and that book continues to sell very well. But if the market gets hot, new issues are doing well, and people on leverage are doing well, a lot of people will be attracted to not only speculation but what I would call gambling. And I'm afraid that will be true in the United States. And I think that China, being a newer market, essentially, in which there's widespread participation, is likely to have some pretty extreme experiences in that respect. We will have some in this country too. Charlie?
Well, I certainly agree with that. The Chinese will have more trouble. They're very bright people. They have a lot of action, and sure, they're going to be more speculative. And it's a dumb idea. And to the extent you're working on it, why, you're on the side of the angels, but lots of luck.
Well, it will offer the investor more opportunities, actually, if they can keep their wits about them. If you have wild speculation, Charlie just mentioned earlier, if we get into periods that are very tough, Berkshire certainly will do reasonably well, because it won't, and we won't get fearful, and fear spreads like you cannot believe until you've seen a few examples of it. At the start of September 2008, you had 35 million people with their money in money market funds with $3.5 trillion in them, and none of them were afraid that dollar wasn't going to be a dollar when they went to cash in their money market fund. And 3 weeks later, they were all terrified, and 175 billion flowed out in 3 days. And so the way the public can react is really extreme in markets. And that actually offers opportunities for investors. People like action, and they like to gamble. And if they think there's easy money to be made, a lot of them you'll get a rush to it, and for a while it will be self-fulfilling and create new converts until the day of reckoning comes. So just keep preaching investing, and if the market swings around a lot, you'll keep adding a few people here and there to a group that recognizes that markets are there to be taken advantage of rather than to instruct you as to what is going on. Are we up there in station? Are you in station 4?
Dr. Bruce Hertz from Glenview, Illinois. I wanted to thank you for allowing me to attend. I feel both honored and blessed. My question for Mr. Buffett is, you've always advised us to purchase equities that appreciate in value. Yet, a few years ago, you sold your used Cadillac at a tremendous profit. How can you justify selling a depreciating asset for a significant profit? Thank you.
Yeah, well, actually I gave it to Girls Inc. and they sold it, and that was kind of an interesting a very nice guy bought it for $100 and some thousand, and I did not, and Girls Inc. got the money, and he came later actually with his family, and he drove it away without any plates. He was driving back to New York, and he got picked up by the police in Illinois, and he said, well, he started giving this explanation about how he'd given this money to Girls Inc. and was driving the car back, and he had this nice-looking family with him, and the cops were quite skeptical. But fortunately, I had signed the dashboard for him as part of the deal. And so they looked at that, and then they just said, well, did he give you any stock tips? And they let him go. And I can't recall ever selling a used car at a profit, but I don't think I've sold any personal possession. Well, I've got a house for sale.
You don't have any personal possessions.
Yeah. No, anything you see with a figure attached like that.
You're a fatter version of Mahatma Gandhi. Mahatma Gandhi.
The guy was a very nice guy that bought it, and that's check cleared, so we're fine. Becky?
I'd like to ask a question that can serve as a follow-up to the question that Carol had asked, and Charlie in that response said that he thinks the Berkshire's businesses on the whole will do better than the S&P 500. Clark Cameron from Birmingham, Alabama, who owns 281 shares of Berkshire B, writes in and asks, why have you advised your wife to invest in index funds after your death rather than Berkshire Hathaway? I believe Munger has counseled his offspring to, quote, not be so dumb as to sell.
Yeah. She won't be selling any Berkshire to buy the index funds. All of my Berkshire, every single share, will go to philanthropy. So I don't even regard myself as owning Berkshire. Basically, it's committed. And so far about 40% has already been distributed. So the question is, somebody who is not an investment professional will be, I hope, reasonably elderly by the time that the estate gets settled. And what is the best investment, meaning one that there would be less worry of any kind connected with, and less people coming around and saying, why don't you sell this and do something else and all those things. She's going to have more money than she needs. And the big thing then you want is money not to be a problem. And there will be no way that if she holds the S&P, or virtually no way, absent something happened with weapons of mass destruction, but virtually no way that she'll have all the money that she possibly can use. She'll have a little liquid money so that if stocks are down tremendously at some point, they close the stock exchange for a while, anything like that, she'll still feel that she's got plenty of money. And the object is not to maximize. It doesn't make any difference whether the amount she gets doubles or triples or anything of the sort. The important thing is that she never worries about money the rest of her life. And I had an Aunt Katie here in Omaha, who Charlie knew well, and worked for her husband, as did I. And she worked very hard all her life and had lived in a house she paid, I don't know, $8,000 for at 45th and Hickory all her life. And because she was in Berkshire, she lived to 97. She ended up with, a few $100 million. And she would write me a letter every 4 or 5 months, and she said, "Dear Warren, I hate to bother you, but am I going to run out of money?" And I would write her back, and I'd say, "Dear Katie, it's a good question, because if you live 986 years, you're going to run out of money." And then about 4 or 5 months later, she'd write me the same letter again. And I have seen there's no way in the world, if you've got plenty of money, that it should become a minus in your life. And there will be people, if you've got a lot of money, that come around with various suggestions for you, sometimes well-meaning, sometimes not so well-meaning. So if you've got something that's certain to deliver, it was all in Berkshire, they'd say, well, if Warren was alive today, he would be telling you to do this. I just don't want anybody to go through that. And the S&P will be I think actually what I'm suggesting is what a very high percentage of people should do something like that. And I don't think they will have I think there's a chance they won't have as much peace of mind if they own one stock and they've got neighbors and friends and relatives that are trying to do some, like I say, sometimes well-intentioned, sometimes otherwise, to do something else. And so I think it's a policy that will get a good result and is likely to stick. Charlie?
Well, as Becky said, the Mungers are different. I want them to hold the Berkshire.
Well, I want to hold the Berkshire too.
No, I don't like the. I recognize the logic of the fact that S&P algorithm is very hard to beat. In a diversified portfolio of big companies, it's all but impossible for most people. But I'm just more comfortable with the Berkshire.
Well, it's the family business.
Yeah.
But I've seen too many people as they get older, particularly being susceptible and just having to listen to the arguments of people coming along.
Well, if you're going to protect your heirs from the stupidity of others, you may have some good system, but I'm not much interested in that subject.
Okay.
You guys have iron bladders.
We won't tell you the secret of that.
I was wondering about a contraption under the table.
No. You can come down and inspect.
All right. Hey, I had a question for each. Warren, I was fortunate to ask you a question, I think in 2011, about legacy and what you wanted to be known for 100 years from now. And I'm kind of curious to hear what Charlie would like to be known for. And Warren, I'm 52, so I guess you started doing this when I was born. And I'm kind of interested in a memory from your first annual meeting.
My first memory when Warren got on this subject and they asked him what he wanted said at his funeral. He said, I want them to all be saying that's the oldest looking corpse I ever saw. and
that may be the smartest thing I ever said. No, well, with me, very simple. I really like teaching, so basically that I've been doing it formally and you can say somewhat informally all my life, and I certainly had the greatest teachers you can imagine. So if somebody thought that I did a decent job at teaching, I'd feel very good about that.
Yeah, to make the teaching and durable. It has to have a bit of wiseassery in it. And that we've both been able to supply.
And for those of you who are old-time basketball fans, I might mention that on Wilt Chamberlain's tomb it was reputed that it was going to say, "At last I sleep alone." Okay, station 9.